look, when you have a situation where more bonds are sold than our bought, rates rise, right? But when more supply, that's more supply than demand. But when more bonds are bought, then our sold rates fall. So we're supposed to believe that someone is interested in buying our 10-year treasuries, and they are doing so to drive rates down. I just have a hard time, believing anyone would be buying our bonds right now when we see Russia and China and Japan dumping our bonds right now. I have a hard, who the hell's buying it? Is it monetization? Look, I think it's important to remember, there it is right there. And I think it's important to
He's
remember
a
what
buyer
Ludwig,
of bonds right now, I hear.
yes. Well, look what Ludwig von Mises said. I'm going to read it. He said, there is no means of avoiding the final collapse of a boom brought about by credit expansion. The alternative is only whether the crisis should come sooner as a result of voluntary abandonment of further credit expansion, well, we're not there yet, or later as a final and total catastrophe of the currency system involved. We're heading in that direction.
Recent data reveals a troubling trend. Japan, one of our closest allies, has been massively selling US assets. Along with China and other BRIC nations, Japan is offloading US bonds, signaling a significant shift in their trust in the US economy. This move raises serious concerns about our financial stability and future economic policies. Andy Schectman highlights this alarming trend, noting that these countries are increasingly opting for gold and other commodities over US debt. This strategic shift could have profound implications for the US economy, particularly as we continue to accrue debt to finance energy imports and other essentials. The United States and the United Kingdom are sinking further into debt, needing to sell more bonds to pay interest on existing debt. Schectman warns of a doom loop where the US and UK become more reliant on countries like China and Russia for resources while these countries accumulate gold. The longer this persists, the higher gold prices go, undermining the stability of the US dollar. With 59 additional countries interested in joining the BRICS alliance, the adoption of a new common settlement currency could further weaken the US dollar's dominance.
China and now even Japan, to a degree, Russia, Saudi Arabia, they've all been selling bonds. Let's just say the BRICS nations have been selling bonds, right? At the same time, arguably, they're buying gold, which we can see. At the same time, the United States and the United Kingdom and these Western nations that we're supposed to believe are buying our bonds are going further into debt. We're supposed to believe that the United Kingdom and Ireland and the Caymans are these are debtor nations that are buying our debt, which we need to sell in order just to pay the interest on the previous debt. And so we see a situation where the US and the UK continue going further into debt. And these countries have virtually nothing in the way of energy production. There was a article that just came out and Commodities. It came out on the UK a few months ago by some politician saying we've got ourselves in a bad place. We're reliant on mainly China and the rest of the world for the majority of all the things we need, these natural resources. You could say the same thing about the United States. So we have very little in the way of energy and natural resource production, where last year I read an article that 70-80% of all the rare earths were produced in China and the Eurasian continent, but 100% were refined in China. That's kind of emblematic of it. But these other countries, so we have very little in the way of energy production and factory capacity. All the factories are in China. They make everything. We make nothing. And we're going further into debt, buying government debt. They're buying our debt, the UK is, and we're going further into debt in order to buy commodities like oil and energy production from the BRICS countries, who instead of, they sell us their oil, and what are we doing? What are they doing with the proceeds? They're buying gold. Instead of putting it into treasuries, they're buying gold. And we're creating more debt in order to buy energy from these countries. They used to buy our debt, but now they don't. So we have to sell that debt to the UK and to the Cayman Islands and Ireland, if you believe that. But this is a doom loop in the respect that these BRICS nations continue to pile into gold and other commodities with the proceeds of the energy we buy from them and the commodities we buy from them, which only pushes those prices up higher. And when you talk about gold going higher, as part of the new BRICS currency settlement, which will be deliverable, this just falls right into the hands of the BRICS countries. So the longer they wait, the higher the price goes in gold, and the more reliant the West is upon them for these commodities. And at the same time, you have a massive growing mass. 59 more countries said they want to join, coming out of Novograd 2 weeks ago. This is something that when you have more and more and more and more countries sign on officially, all accepting a common settlement currency that is not US dollars, that is settling in essence in gold, which is 40% gold, which is deliverable, which is held within the own borders of these countries. And that's a very important point here. If you're in the unit white paper, it talks each one of these countries will hold their own gold. So when you see this mass repatriation effort, and in particular, India is a good example, repatriating 100 metric tons they've held at the B of A, at the Bank of England, B of E, Bank of England since 1991, and all of the countries repatriating their gold from the New York Fed. Well, that makes sense. These countries understand they can hold their own gold. They'll continue to buy gold because it will be what they settle in, which has outperformed the bond market 2-to-1 over the last 25 years with no counterparty risk. So the longer they wait, the more countries join on, the higher the price of gold is going to go, and the more trouble that the West will have in I think finding natural resources and people willing to hold their debt. So would it surprise me if they issued it in October? No, it wouldn't. But I think it would also not surprise me if they waited another year, to your point, in 2025. And James Rickards has an interesting take on it. He says, yeah, it's all about mass adoption, that right now there's 10 countries that they can shop with if they had a common settlement currency. 10. What happens if it's 69? If they said, fine, the other 59 are in. Now you can buy goods and services from 69 countries instead of from 10, which was previously 5. And pretty soon you have such a massive swath of GDP, human population, commodities, shipping lanes, military might, that not only is it a massive real entity in every single way, but then issuing that common settlement currency, it's almost 100% guarantee that it works to a massive detriment to the dollar, to the treasury market, and to the way things have always been in this country. You know, we went to Iraq looking for weapons of mass destruction. Sorry, we didn't find any. That's the difference, and here we are 20 years later still there. This is what they've always done, through coercion. And now look at how different things are. You got Saudi Arabia just warned the G7 that if they steal the $300 billion in sovereign assets, that they will sell their European bond holdings, starting with those issued by the French Treasury, if the US-EU coalition moves forward with this. So that's how far we've come, because they're finding safety in numbers. But yeah, that doesn't surprise me at all. And I read that, actually. I read that this is a little bit of an older article. I did read it, and yeah, I don't think it's, and they were probably told that too. That look, he probably went there and said, look, I don't want to, force you into doing this, but this is what's going to happen. That's kind of the playbook that we've used for a long time. It's one of coercion. And if you even look at the Shanghai Cooperation Organization, it's all about cooperation. If you look at the BRICS, there's not going to be a common currency, at least not yet. It will be a common settlement currency, with every country maintaining their own central bank digital currency and their own monetary autonomy. The BRICS use a rotating presidency so that there's not one voice louder than the others. These are all things that maybe they're learning as a result of what happens if you go around the world in a unipolar way and doing it in a coercive manner. So I know that this is the only place I've ever read that, but it makes good sense to me. Said forever, I can't imagine that they would lower rates, and they haven't so far. I mean, remember, there was going to be 4 or 5 cuts for sure, and then, well, maybe one, and then maybe none. Maybe they're going to raise, and there's $14 trillion in debt that needs to be retired this year as maturing debt, or to pay interest expenses, or to cover the ridiculous amount of irresponsible fiscal spending and deficits of our government. how the hell do they come up with that? Maybe you can, as rates have been going down, what you are seeing is the Fed intervening already through, as Jim Willey puts it, the UK and Ireland and the Cayman Islands funneling money under the table. Because look, when you have a situation where more bonds are sold than our bought, rates rise, right? But when more supply, that's more supply than demand. But when more bonds are bought than are sold, rates fall. So we're supposed to believe that someone is interested in buying our 10-year treasuries, and they are doing so to drive rates down. I just have a hard time believing anyone would be buying our bonds right now when we see Russia and China and Japan dumping our bonds right now. I have a hard, who the hell's buying it? Is it monetization? Look, I think it's important to remember, there it is right there. And I think it's important to remember.
He's a buyer of bonds right now, I hear.
Yes. Well, look what Ludwig von Mises said. I'm going to read it. He said, there is no means of avoiding the final collapse of a boom brought about by credit expansion. The alternative is only whether the crisis should come sooner as a result of voluntary abandonment of further credit expansion, or we're not there yet, or later as a final and total catastrophe of the currency system involved. We're heading in that direction. You lower rates, you have acquiesced once again. You're just going to reignite inflation. Yeah, the numbers they tell us are all fugazi. You can't believe them. Inflation is way higher than they're telling us. And this is a politicized event by the Fed to lower rates 2 months before the election. And, you know, if they do it, fine. But I think it's stupid, and they'll never normalize their balance sheet. And it just signals to the world, why the hell would you want to sell us your oil or your commodities for a currency that once again will give in to inflation over austerity? And once again is rigged. I mean, it's rigged in every way, even in the way that they measure all of the numbers to gauge their policy decision, including unemployment numbers. And if they hired John Williams instead of the Bureau of Labor Statistics, maybe we would be able to direct monetary policy to right the ship. But what they are doing by giving in and lowering rates is the worst thing that they can do, and just giving up on ever getting this house in order. And, you know, it would start with stop spending. And the spending that we do is ridiculous. $100,000 per second is the amount of debt that we are creating. That's $1 trillion every 100 days, and not slowing down. So yeah, if you believe that inflation is where it is, I got a bridge to sell you. And that's why you take a look at all of these markets that just keep going straight up when compared against, you know, like the 10-year treasury. When you're comparing it, all of these markets are going straight up. All that money that's been created and poured into the system, whether it be gold or Bitcoin or the S&P or the NASDAQ, all of these things is shooting up because of all this money, and that will just keep it going higher. So it's good for gold. It's good for the market. And ultimately, it's not good for this country. So yeah, they'll probably lower rates, but I think it's really a dumb thing, because it's only going to make a bad situation ultimately worse.